Welcome back. You're watching Indian Open right here on BloombergQuint Live. Avinash Gorakshakar, Director of Research at Profitmart Securities, is joining us right now. Avinash, good morning to you. The big number than ICICI Bank, which reported numbers, it was touted to be one of the banks that would do relatively better, and the results show it.
Yeah, exactly. I think, Devina, if you see the numbers, I think in line with market expectations, and I think to a large extent, the market was anticipating this, considering that, this was a quarter where Essar Steel's NPA had been accounted. But I think one possibly marginal disappointment was on the slippages number. I think the slippages have been much higher than what the street expected. But overall, I think a decent set of numbers. If you see the net asset quality, I think it has come down on a YOY basis as well as on a sequential basis. And our sense is that, both the corporate as well as the retail book should definitely grow stronger. In fact, the management has reiterated that possibly they could be hinting at a 15% ROE by June 20. So I think this is definitely something which would excite the market. And looking at the trend of most of the other private sector banks, I think this is one bank which has actually delivered on the numbers and not many negative surprises.
What about Bank of Baroda? That was a big miss, at least with regards to a spike in the asset quality deterioration.
Yeah, I think asset quality deterioration has been a big negative surprise. But I think even if you look at the advances growth and the overall asset book growth, I think that has been extremely disappointing. I think the markets were definitely not looking at such a big negative surprise. And our sense is that, the stock could possibly correct significantly going forward unless and until the market sees a decent amount of growth on the loan book growth side and asset quality now getting stabilized. At least, for the fourth quarter, hopefully we expect that asset quality levels could be sustained. But I think overall, the numbers which have come on the operating metric side, especially the loan book growth, the NI growth, I think that is something which the markets definitely could not be happy about. So I think it would be an avoid as of now. I would believe that, it's better to wait for at least a couple of quarters before one could take a call here.
One set of numbers which also disappointed the street, which have come in below estimates if you look at them, not just on the headline numbers but otherwise on the internals, is JSW Steel. But the sector is doing okay. What do you think, Avinash? I
think, Neeraj, my guess is I think numbers were definitely expected to be much better. But I think markets are probably looking at the fact that the Jan to March quarter could be a much better quarter in terms of margins and in terms of top line growth. And I think the management is quite positive about it. Our sense is that, maybe from these levels, the stock may not correct significantly. But overall, I think numbers were definitely slightly disappointing, both on the operating EBITDA front and on the net profit front. And our sense is that possibly the fourth quarter could be better. So I think not a very good set of numbers, but at the same time markets are hoping that possibly the next 1 or 2 quarters one could see a turnaround and a strong bounce back on the EBITDA margin front.
Well, it should be interesting to see what this one does, because since the steel companies are just in such a good role that maybe the commentary from the management, which sounded a tad bit more optimistic in the quarterly performance, could maybe shore up the stock if indeed it were to correct today. Yeah, so it'll be interesting to see what happens there. Okay, let's wait and watch. JSW Steel is the other one that is an important set of numbers. Some other companies that you should watch out for in the session today includes some other results that were declared and a slew of important numbers that come out with the quarter 3 number delivery today. So let's take it to our research team to try and talk about all of those. Looked very strong. Well, 2 mid-sized names. Avinash, I don't know which one you track, so I'll toss both of them to you. APL Apollo Tubes and the kind of bottom line expansion on a slow base, or Prestige Estates, wherein EBITDA was getting impacted because of the Ind AS impact, but revenues looked very decent.
My guess is I think APL Apollo Tubes definitely has done an excellent job, and in fact it has been one of those smaller steel companies which actually has delivered excellently both on the volume as well as on the margin front. Our sense is that, Neeraj, this stock could get further re-rated considering the fact that the management is extremely positive, some more expansion coming up, and obviously if they manage their cost well, I would not be surprised that they could even maintain these margins. As far as Prestige Estates is concerned, definitely a positive set of numbers. I think what is encouraging is both the top line as well as the bottom line has grown commendably. I would believe that further re-rating of the stock would depend on what kind of launches they have and typically how prices move in the Bangalore market, because they are large players here. But overall, I think a pretty decent set of numbers from these 2 small companies, and I think you could definitely see a good uptick even in these kind of volatile markets.
Maruti will also be reporting its numbers this week. Avinash, are you factoring anything?
Our sense is that definitely margins would definitely be stable, and on the top line growth, we are not expecting a very significant increase of 5 to 6% growth in the top line, but I think 9 to 10% drop in the profit is anticipated. I think going forward, what would be the margin outlook and the volume guidance, Devina, that would be key, monitorables, because I would not be surprised that the Jan to March quarter is also going to be a challenging quarter. On the ground, automobile sales have not yet picked up, and I think to that extent, the markets would be looking cautiously, ahead of the budget, what kind of announcements come in. But overall, I think at around 7,000 odd levels, clearly, I think one could definitely, nimble it for a long-term kind of investment.
The other piece of a newsmaker before we get to our Bloomberg Edge segment is Siemens, wherein they have announced the acquisition of 99% stake in CNS Electric Limited at an EV of about 2,100 crores, if I'm not wrong. The scope of the acquisition comprises low voltage switchgears and panels, power push bars, as well as production and metering devices. Now, Avinash, I don't know if you looked at this development, but I think a couple of notes that have come out are saying that maybe this is not the best use of cash in the books on the part of Siemens. Have you observed this? Have you analyzed this? What's your view here?
No, I think Neeraj, this acquisition is not going to help Siemens, at least in the short term. I think looking at the kind of performance Siemens has put out, it is very clear that unless the macros improve and the government business improves, I think because a large extent of their business is determined by what happens on the macro front, they could definitely be accused that this kind of money invested in this asset may not yield immediate returns, but over the next say 1 or 2 years, this could be a very good acquisition, considering that this enables them to increase their market reach and customer kind of acquisition. But overall, I think in the near term, one could not expect a very significant kind of earnings kind of accretion purely from this acquisition. So apart from that, maybe the stock may not get re-rated immediately, but despite the fact that valuations are expensive, I would believe that hopefully some announcements in the budget come in and some kind of improvements come in the Jan to March quarter, one could definitely see the core business improving. But this acquisition, probably you'll have to wait for 1 year for earnings numbers to actually look up.
But you're not taking a call on the stock on the base of this development?
I wouldn't be, because the operating metrics for the previous quarter, Neeraj, were not all that great. In fact, the market was not very happy. So that's my question actually. If that was the case, and if they've done this acquisition, if you had the stock in your portfolio, would you get out of the stock? I would definitely, partly book out, because this is not a news flow which is going to re-rate the stock. Obviously, longer term it is positive, but in the near term, I think it does not add any significant value to the stock in the near term.
Okay. Well, do watch out for Siemens in the session today. This could well be a stock that you need to watch out for. The other one, on the back of results, we spoke about Prestige and APL Apollo. Avinash went, again, not a very liquid name, but the numbers left a bit to be desired.
No, I think they are largely a machine tool manufacturer, and I think looking at the kind of headwinds in the market, Neeraj, I don't think you're going to see a significant kind of uptick in this business, at least in the very near term. I think it would possibly take at least 1 or 2 quarters before we could see a kind of turnaround in their operations. I think top line itself was down by about 20% and profitability was hit. So I would not be surprised. This is a fairly illiquid stock, and unless we see a decent kind of improvement on the capital goods players, basically because this business is largely driven from the capital goods companies, I wouldn't be surprised that this stock may not actually move up or move down, considering that not much liquidity is there in this in this cash.
Well, we'll watch out for all of these names in the session, but JSW Steel likely to start off weak, and that doesn't augur well. L&T, after 2 or 3 days of an uptick, also gives up some of the gains, so maybe just routine profit booking, but that's something you need to monitor. Avinash, as you've observed a set of earnings in the first 25 days of the month of January, which number has stood out the most for you? Any number, or any 1 or 2 numbers that have looked very interesting, either from a good performance or from a poor performance?
I think clearly, I think from the private banking pack, as I mentioned to you, ICICI Bank has delivered a pretty decent set of numbers, and the management commentary has also been very solid. As far as the negative surprise goes, I would believe that, I think probably we are waiting for most of the bigger auto numbers. So I think, something which is yet to come in. So I think Tata Motors numbers, I believe, are going to come in this week. And I think, one would be very closely watching what kind of numbers they put out. I would not be surprised that we could see some further stress on their operating margins as well as on their, on their bottom line. So I would believe that probably some more correction on the Tata Motors stock could happen. And considering the kind of headwinds both in the domestic as well as in the European markets, I think Tata Motors definitely looks pretty weak. But on the other hand, clearly from the private banking back, any dip on ICICI Bank would be a good opportunity.
Avinash, just one last word. A stock that's been very volatile but largely on the uptrend, JSPL, quick 30 seconds. What's your thought here?
No, I think I would believe that we could see better set of numbers for the fourth quarter, and I think already there has been some marked improvement on the operating metric side. So I think clearly, at these levels, Neeraj, this definitely offers a decent risk reward, provided one is looking at FY21. Maybe for the fourth quarter we may not see a big improvement, but FY21 from the metal price increase as well as the operating profit increase, I think I would definitely look at it positively.
Okay, Avinash, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.